Hello, everyone. I hope you can hear us now. There's a couple of people mentioning there's no audio. We'll just wait a few more minutes to just give everyone the chance to join, and then we'll kick off. Right. Well, firstly, welcome everyone to today's webinar panel on audit independence. My name is �𝐻𝐿𝐿. I'm the Partner Engagement Manager for CLASS, and I'll be moderating the session today. We've organized a panel of three well-known industry professionals with insights into this particular topic from various angles, and I'll now pass to them briefly to introduce themselves.
Thank you very much, 𝐻𝐿𝐿. So my name is Clint Estevilla. I work at Cloudoffis. I guess we're in a unique position to talk about the technology side of things in the market. We've got two products that automate the compliance side for one, and then the audit side of SMSF for the other. A lot of these changes are potentially going to mean structure changes. So yeah, we can sort of cover off how technology could potentially help firms that are going to need to go through those changes in the coming 12 months. Monet.
Sorry guys, I'm Monet Barnes. I'm with CLASS. I've been with CLASS for a little while, particularly focusing on service delivery and onboarding accounting firms that use our software. And recently also a responsible manager for our AFSL. And part of my responsibility is making sure that we maintain our accreditation for the ASAE 3402 report. For accountants and auditors to rely on the controls in place for our data feeds. And then we also rolled out ISO certification in our business, and I'm also responsible for that side of our systems running according to the ISO guidelines.
And my name is Jeff Rooney. I'm a partner within the audit division of BDO Australia. I'm chartered accountant, registered SMSF auditor, but also registered company auditor. So I bring a perspective around the audit process, audit independence, not just for self-managed super funds, but sort of more broadly, you know, what's been the journey and the history around auditor independence, which seems as though is an exciting and hot topic at the moment. We're getting a lot of questions, so I'm glad to be here on the webinar today.
Thanks, everyone. So just to kick us off, a bit of housekeeping. We'll have a bit of an open discussion between the panelists around various aspects of this topic first. But if you have any questions along the way, please feel free to enter them into the panel, into the question panel, and maybe also include who you would like to ask the question to. And we'll try and get through as many of those in the end. So to begin with, we've prepared a little poll for panelists to get an understanding of who our audience is today. So I'll bring that up now and give you a few seconds to respond. Awesome. So that looks like we've got a majority of firms that do in-house compliance and audit. So I think that'll actually be quite a good audience for this discussion today. So to get started, I thought it'd be good to set the scene. And Jeff, will you be happy to kick us off with a bit of an insight on what this new independence regulation is all about?
Yes, look, happy to, Mike. And I think it's always interesting to start with a bit of perspective and context. And I'm sure a lot of the people on this webinar will know some of the history, but sort of really as a recap. And as we look at what's happened in the audit profession more broadly outside of self-managed super funds, there's been a move and a focus around audit independence that's been shifting over the last 20, but a particular focus then in the last probably 10 to 15 years around a heightened focus on auditor independence in general. And so that started from a listed entity perspective and then's been cascading through the audit ecosystem. And so it's really the focus from a self-managed super fund perspective. It's just really playing a little bit of catch up, I would say, in terms of the wider audit profession. Those that are a bit of sort of study nerds and sort of like sort of the audit standards and independent standards like myself, may well sort of know and sort of reference the guides. And so there is a body, obviously the CA and the CPA, etc., from an accounting body have a perspective around auditor independence, and there's various guides and independence declarations which those of you who are auditors need to make, as well as accountants. But also there is the Accounting Professional and Ethical Standards Board, and they've been around since 2006, so it's nothing new. And so within that there is an independent standard which is 𝐻𝐴PS 110, which is the relevant standard in this case, and they also produce an independence guide. And so what really has kicked off a conversation here and with heightened focus is the refresh effectively of that guide. And so it is the 5th version of the independence guide, released this year in May, and that really had some tweaks and some extra precision, specifically as it relates to self-managed super funds, and really some focus on the definitions. And particularly, I know a lot of you, and there's been a lot of conversations in the industry around routine and mechanical, and what might that mean, and its impact on can you perform an accounting function, an admin function, as well as doing the audits in a self-managed super fund context. So that really is the background to set the scene, and really off the back of that that refreshed guide, there's obviously been some media and some announcements around the ATO and the Commissioner in terms of their view around focus and review on auditor independence in general, which leads us to this webinar today.
Great, thank you, Jeff. So as you said, the media has been talking a lot about this definition of routine and mechanical. So what does that actually mean, and how does it constitute an exemption, especially?
Yeah, look, I think it's one really to unpack, and I would say not to be sort of overlooked. So routine and mechanical, there are a number of specific items which are referenced both in 𝐻𝐴PS 110, but also the independence guide, which I can specifically talk to. But for those on the webinar, if you haven't looked at 𝐻𝐴PS 110 recently, it is worth going to the specific section of the guide to look at that, remembering that doesn't just relate to self-managed super funds, it relates to the industry as a whole. But the reference, if for those of you who are specifically interested in terms of 𝐻𝐴PS 110, is section 601.4A1, and that lists out a number of different elements. I know, sorry guys, my fellow panelists laugh at me, but I thought for use it's useful to know precisely where it is. That lists out a number of points, and particularly there's 3 points which are of note for this audience, which are particularly helpful in a self-managed super fund context. and they specifically say, are you posting transactions into the general ledger which the client has approved? Has the client approved the trial balance? And are you constructing financial statements based on a client approved trial balance, and also preparing the notes in accordance with client approved transactional data? And so when you look at those points, and then you also combine it with the guide, and the guide within section 8, it specifically relates to self-managed super funds, and that has some specific commentary which is fairly interesting. But specifically, it says that in the context of a self-managed super fund, the starting premise is that it would be unlikely that that clients could would be availing themselves of that routine and mechanical exemption, if we're going to call it that, just because you'd be saying, if a client has the requisite knowledge and skill and understanding to be responsible for all of the general ledger and coding all of the transactions and responsible for aligning all of the underlying financial data, the question that would sort of arise would be, well, then why are they working with an accounting professional? So there's really, as an administrator and as an accountant and as an auditor, you'd have to be comfortable that you could evidence that the client had the requisite skill and experience and qualifications to basically be doing the admin and tax and accounting for the fund themselves, and they're really just using you, in my words, as a bookkeeping sort of role to prepare the accounts. But that's all. There's no sort of thinking that you're doing. So it's a fairly high bar, perhaps, to be covering. And so I don't think that the reality is that people can say routine and mechanical is an effective get out of jail free card to keep doing what people are currently doing without really looking at the nature of your funds and your business. So hopefully that sets a long definition and context around routine and mechanical, but useful, I think, to be able to dive into some of the precision with relevance to the guides and the material that's out there.
Yeah, no, Jeff, that's definitely quite a high bar to jump through. I think initially when we started looking at this, a lot of people in the industry were saying, if I have data feed set up and it's pretty much autopilot and it does process all the transactions, so the accountant is not really touching that fund during the year. It might be a fund with a few securities and a bank account, and not much advice around that they could get past with the routine and mechanical. But I think the reality is that feeds, although they do help you in preparing your accounts, there's still the technical know-how on setting up transaction rules that consume those events, and especially the ones around pension payments and contribution allocations, and even where shares are sold, if there's a capital gains implication and there's a particular setting in our software that the accountant has chosen and not the trustee, then again, is it routine and mechanical? So it's definitely up to debate. I think, from a class point of view, we're definitely trying to help the accountants and the auditors by having certification on the data feeds. But I don't think that, just the fact that there's a data feed running and there's no manual touching will constitute routine and mechanical according to that definition.
Yeah, I'd agree with that, and I think there's the consideration too. Obviously, as a self-managed super fund auditor, there's a variety of things which need to be signed off in terms of the audit opinion. One element of that is the financial statements themselves, but also then there is the wider SIS compliance, which also needs to be considered. And so those both in tandem are important to consider, so that if you can, perhaps you could look to pass the data feeds hurdle, and the data feeds will be important from an efficiency and also a reliability standpoint. But there's the wider opinion, which also auditors need to get their head around as well, which is sort of part of that holistic fund approach.
Yeah.
Right.
The only other point that I would reference, sorry, Mike, I just was, again, you can't get me off the topic of independence. So I'd say the other thing that's just worthy to mention when we're thinking about independence in general is a little bit of substance over form. So there is, how do you legally review the definitions and the guides, which I've sort of given some reference to, and so mounting an argument around routine and mechanical for that, which firms should look to do if they're looking to continue some of the status quo, because if the ATO asks them a question, it's good to have that pre-prepared and that clear in their mind. And so that's the substance. Also, there's the form, and so that is, what is the reasonable person test? And so there's the element of, well, would it appear to an independent party that there could be a conflict or a threat to independence? And then that would particularly, the guide talks about a litmus test in terms of, well, it's sort of a bit of a sense check, which is if you as the auditor would feel worried, concerned, or hesitant about raising a contravention or issuing a qualified opinion on a fund because it's with it's in-house or it's with a related entity, that may be a clear sign that there is a threat to independence, and that if it can't be suitably managed, you should look to not do the audits themselves. And so I think that is a reality of the brand damage, that if you feel like, well, look, if you're doing the admin and the audit as well, and depending on where it sits in terms of the hierarchy of importance for your firm, if you don't want to rock the boat by issuing a qualified audit opinion, the guide sort of alludes to that may be an indicator of a threat to independence. So hopefully that helps. Sorry, Michael, for cutting you off.
That's all right, Jeff. Thank you. So one question that comes from that, and was also what a lot of the questions that are coming through now sort of show, is a lot of firms are asking, what does this ruling actually mean for their firms, and what are we seeing in the market in terms of movement and what's happening?
I might start with that, Micah. So our customers are certainly asking a lot of questions. I think since the announcement of the guidelines, it's been very much a state of play of trying to define what's going on. So obviously leaving that definition part to my colleagues on the panel to kick that off with. I think from where we were in maybe June to now, I think it's starting to be a bit more firm. I think people are starting to really think that this probably does mean change. So we actually are starting to see some change with firms, like firms actually sort of starting to pretty early on look at what kind of structure will ensure their compliance moving forward. If that means moving audits out, if that means trying to replace internal compliance work audits with external audits to maintain an audit division. Yeah, it's definitely at a point now where people are looking at, what is it going to mean and what their options are.
Yeah, no, I agree with that, Clint. I think what I've seen with our customers as well, when you adopt new technology, start using the class SMSF software, it takes a couple of years for your auditors to catch up, even if it's internal auditors, to the process and to understand what this new technology is that the accounting team is using. And I think just on that trend, we're now at the place where we really need to have a look at what technology are we using for audit, and can we be more efficient there, and can we use that then to drive processes to keep the independence if you are internally auditing as well as preparing financials. So I don't think at the moment it's clear cut that that it has to be separated and it has to move external. I think there's still things that businesses can do to provide both services, but I'm expecting that there will be a push just to make things easy and clean to go external with your audit. I think the relationships between the trustees and accountants at this stage are so close. The relationship with the auditor is a little bit further removed. It's kind of more whatever my accountant tells me to do is what I'll do as the trustee at the end of the day. So you hold that card, but it's also a matter of cost. So if you're a smaller firm and your compliance cost is going up, just making sure that you're doing the right thing and you only audit a small number of SMSFs, then perhaps it's a good time now to get ahead and look at these external audit providers that's more efficient and can provide a better service, maybe for even less money as well than what you can do in-house at the moment. So I think people will be taking this opportunity to consider, their longer term strategy. What are they going to do? And even if you have a friend, another accounting firm that you provide your customers to, and they're the only firm that does audits for you, or they do audits only for the one partner, then maybe there's also another question of whether that is going to keep on flying, and whether you should look to a partner that has multiple external customers and doesn't have the problem potentially with independents coming in and saying all your customers are coming from one source. So again, I think it's a good time at the moment to prepare early and to get ready for this and consider how you can improve. I think the other side as well is we look at audit as the last step of the process, but I think preparing for an audit and getting the transactions and the evidence together and making it easier for the auditor to provide the audit will also provide heaps of benefits to you and be able to scale out. So I think we'll definitely get to that point a little bit later on, but I think that technology is going to be one of the key decisions, and a partner that uses the technology that you want to use going forwards would be the other driver.
And makes sense, Monet. I think from an audit perspective, I think you're right in terms of there isn't anything which says there's a compulsion to outsource or to divest. So I think it's just part of people need to. This is a change, or this is a new area where people need to have a proper think about what their operating model been to date and what is their desired operating model that will be compliant going forward, and that really that thought process should consider people, process, and technology that supports that whole sort of paradigm and change.
Yeah.
I think the initial guidance from some sources or some articles on like SMSF Advisor and the like, that there could be potentially up to like 200,000 odd funds affected, and when the ATO comes down with a bit more guidance as to when they might start cracking down, whether it's 12 or 24 months, that's quite a bit of change potentially in the market over that time. So yeah, I think as Jeff said, there's certainly obviously where applicable, that people, process, and technology element that firms are going to need to have a look at, I guess, once they determine where they land amongst all these potential changes.
Great. Another question that has been coming in a lot through the panel, and that I know we had on our list as well, is when do we think that firms will need to be set up by, according to these new rulings?
Look, it's I'm happy to take that one, Mike, to start, and then I'm also chomping at the bit because Monet is giving me the license to talk about an audit process more generally. So I'll make sure I circle back on some elements of that at some point. But I think that there's it's an interesting piece around, look, when will it start? When will there be a change? And there's a lot of people will be hearing a lot of conjecture in the market about it. I mean, the starting premise that I would have is that, well, the independence standards have been there for some time, and so there isn't a dramatic change in the consideration for independence. There's just really some more clarity. Some people within, on this webinar, and definitely some people that are our clients and that I'm aware of, they have already received letters from the ATO, and that is for previous years, not even this sort of financial year which we're talking about now. And so the process has started. And so I think it'll just be a gradual escalation and ramp up of focus from the ATO around asking firms questions around it. They've released some information in terms of their areas of focus, and there sort of is various media announcements, etc., that they've made. But there's some areas which they'll be looking at, which is things like long-standing relationships between a candidate administrator, concentrations of funds with a particular administrator and an auditor. They're looking at mutual sort of referrals or reciprocal referral arrangements between entities. and also things like concentrations of referral arrangements in certain regional areas. So the ATO, as you'll all be aware, is significantly investing in the use of technology, significantly investing in the use of data matching, and with all of the the attestations and requirements that both large administrators and software firms plus auditors have to provide, they do have an increasing ability to unpick and unpack where there are concentrations and potential threats to independence. So from what I would see, and there hasn't been anything that I'm aware of that's a hard and fast announcement, I'd be saying that there'll be a ramp up of activity and please explain style letters which are issued over the course of this year, and then an escalation into the year after. Given the number of funds which Clint just outlined, and similar to been seen, somewhere in the order of a couple of 100,000 funds may well have to think about moving, and so that's a big number. And so to manage that change in an orderly manner, I don't think it helps anybody to say there's a big bang and that all needs to happen by a specified date. But I think it's more of a when rather than an if, as to there being a gradual push for there needing to be some move and some shift of funds over the next 12 to 24 months would be my general sense. I don't know whether, Moray, you're sort of seeing a similar thing in your conversations.
I don't have any numbers to support that at the moment, but it's definitely something that we will analyze and see, if we can spot the trends and things changing. I think probably more important for auditors to know is that the ATO only audited 25 out of the top 100 in the last run, and they're targeting the other 75 out of the top 100. And they also indicated that they're going to go after the next 100, or the top 200, soon after they've completed that 75. So it seems like they on this plan to basically get to every auditor at the end of the day. So it'll be how quickly can the ATO do it. That's how quickly your turn is going to come up. And I guess if you're the biggest one, you're going to have the first go. But I would say, again, coming back to, you want to plan ahead and be ahead of the curve here. You don't want to wait till the ATO knocks on your door and tell you you're not doing the right thing. You want to make sure that you get in early, prepare your house and do it at your terms. It's always easier when you can do it on your terms, on your timeline, rather than getting forced to do something. I think two out of the 4 auditors that got referred to ASIC hadn't in their license, so that's not a good outcome either. So you want to prepare and be ahead of the curve.
I think that the preparation ahead of the curve sort of fits in sort of nicely in terms of the thinking about technology, the people process technology sort of arm. And often, and I'll say this as an auditor, is that you mentioned it before, Monet, around being that we're at the back end of the process and the back end of the food chain sometimes. And I think that piece is that makes sense and that's reasonable, particularly the way that audits were done and executed in the past. And that's particularly easy if you have an in-house audit, because it is that you can go through the process you're doing in terms of the accounting prep and the financial prep, and then just lob it. In the days, so when I sort of started auditing the hard copy files and just passed the hard copy file across, down the desk, and then we're away. I've got a couple of questions. Yeah, is that a transaction fine? Is that okay? Yep, great, done, and sort of it's finished. But that's significantly changed now, and I think for people to be focusing on, if they need to be looking to change their current operating model related to audit, how can they facilitate that? And that is, well, can they partner with the right person or a firm externally from a relationship, communication, working style perspective? Do they need to have communication and correspondence with an auditor through the year versus waiting just to the end and then sort of being more of a traditional, black box, shoebox style audit where you just sort of pass it over the fence and then sort of hope for the best? And you may get a lot of questions from that. How do you facilitate, with the use of technology, the transfer of data, the facilitation of questions back and forward, considerations around data security, avoiding handoff points and the usage of email, and then the operational costs around who on your side manages that relationship? and managing an external relationship obviously is different to, just passing a file, over a desk in the same office. And so there are those things which, as a change program, effectively, people do need to work through properly. And then there's also cost. And so as an auditor, I'd love to say that self-managed super funds, were rivers of gold in terms of the individual audit fee. But as we'll all know on this call, the prices for SMS audits in some areas are lean, and there isn't a lot of margin necessarily within that. And so you need to think about that as an auditor, but also as an administrator, as to what is the price point that you want. One being, you don't want to be compromising audit quality as the auditor or as the administrator, because that will be unhelpful long term for your client base and for you. But also, if you're going for the cheapest price, and sometimes that might be relevant and suitable, but the risk sometimes, if you're going for the cheaper price and you haven't considered all of the other elements, what I often see is there's an opportunity cost for that. So you might pay dollar at the door cheaper price, but for the sake of saving $100 or $200, what is the impost on your staff from a process that is quite clunky? And so does that cause you a distraction or pain in that you're delivering? Audits are late, there's unplanned qualifications, and or there's surprises in terms of you've got to go back to your clients and say, look, I know we started, I know we've got all this information, but the auditors now need 5 extra things which we hadn't planned. And so you're having to pick up and put down and drag people through a process which is long and protracted. And so all those items I think are worthwhile having in the mix in terms of thinking about a change in process. And none of those are, let's do it 30 seconds before midnight, 30 June 2021. There's something which should be a part of a wider conversation and thought process.
Yeah, I think that's an interesting conversation in the light of, if you are currently doing your own audits, that even in that scenario, how much time have you spent with the accounting team that's preparing the files to improve their preparation process? And also, the documents that's being collated and whether they passed across to the next cubicle or over the web, which is more likely in COVID times. That process as well, how efficient is it? And is it a clunky process? Is it a file and box that someone has to go and search for and find? Or is it something that's properly referenced to the accounting records and it's easy to find? And again, no duplication or no which version of that document that we work on, that you're always on the latest version, you're always sharing the right view of that file or of the transaction. So I think if you are considering going external, that question even becomes a bigger question, because then you would want to look for partners that can consume all the work that's already been done by the accountant in the preparation to make their audit more efficient. And if you're going to invest in technology to prepare your clients' files better, then you definitely want the partner that will just quickly pick that up and not be going backwards and forwards and asking for 100 additional things, because they should be able to just get it from the accounting records. Clint, you probably talk about that.
Yeah, no, it's a good point. Obviously there's this sort of compliance risk that's arisen, and that's for a lot of firms going to mean change, but then that change is going to bring a lot of business risk. So as you guys mentioned, finding new relationships, working with like-minded firms, figuring out what those external workflows, internal workflows look like, the potential back and forth, as you mentioned, if that sort of stuff isn't bedded down early. So I think, at the same time as trying to understand the compliance type risk, there's obviously business risk. It comes down to potential cost blowouts, resource people management, all that sort of thing. And then, yeah, as you mentioned, Monet, I guess that's where technology can come in and play a part in trying to help that transition be a little less painful.
Something we've seen as you allude to, in COVID times, I would not have been doing a webinar, at home previously. I would have been, in the full suit and tie in the city. So I mean, we've as a society, we've gone through quite a significant amount of change quite quickly, and so use of technology and sort of quick adaptation has really sort of hammered home the benefits and the technology we could use, which we should be thinking about using more, particularly in a change. And so I've had some clients where it was quite interesting, never thought it would be a problem before, but Melbourne-based, a lot of the files are hard copy, and so us having a conversation about, well, they cannot physically access certain elements of audit evidence and books and records because it's in the office and they can't get there, which many of us would never have thought would be a problem before. So it does really highlight the benefit of a digital sort of record and the way to pass things back and forward between us within an accounting, admin, and audit perspective. I think it also is quite good, outside when we talk people, process, technology. I'd say we're seeing clients thinking about from a staff retention point of view, and I talk sort of accounting and admin sort of folk, but as well as me in the audit space, it is that it's beneficial for us because we can say we can access a talent pool which is much more broad. You don't have to have, for me being Sydney based, I don't just have to consider or look at employees who are specifically based or can access the Sydney CBD. With the use of technology, I can access a wider grouping of people, which I think is good from a business model perspective. Far more flexible than the hard copy file days. And so I think there's a piece of saying, well, if you are considering making a change, if you are considering moving away from the hard copy file as I just would describe it, the piece is more than just saying what's your minimum viable product. I think it is useful to say, well, how do you, transform that end-to-end model? And so, audit at the back of the food chain, this is what's starting the conversation. Can you or can you not keep doing the audits? But I think that that question helps you then sort of think through the down the value chain of, well, if you're not going to do that, how do you facilitate the audits? How do you do your admin? How do you do your document storage and tagging and flagging as part of your general administration process? It's a useful time to look at all, because if you're going to make a change for one, you can be saying, well, how can you change your whole end-to-end process to make it quicker, faster, better for the benefit of you and your clients?
Awesome, thank you, Jeff. So I guess we've kind of gone through a bit of a definition of what's going on. We've sort of spoken about what the impact is on firms and what the timing is. And I think it'd be useful to sort of dive into a few of the questions that have been coming through. Also because that will also touch on a few other things that we've had on our list of things to speak about. So the first question we've got here is aimed at Jeff, but obviously anyone who wants to say something, feel free. Are you seeing bigger firms looking to split out audit practices in Australia, the same as will become mandatory in England? Is that the natural extension of this move over time? And I think also as part of that, maybe talk a bit about the trends you've seen in other industries that have already gone through this audit independence issue.
Look, I think it's a great question. I think it's really on point, and I'll preface my statement of saying, this is a Jeff Rooney view and observation, not a BDO observation. But I think it'll be that I think it's the right reference point. So what are we seeing, as a collective industry here? What are we seeing in the UK, and what are we seeing through Europe, where there's change on this independence paradigm? So it is. Do you have to rotate the individual audit partner? Do you have to mandatory rotate the audit firm, or have an audit tender process? Obviously, that's more at the corporate level, but it's a useful reference point to be thinking about. There's obviously conversations around splitting out audit versus advisory, given perceived conflicts around independence and cross-subsidisation. So that's at a broader macro and general audit and professional services level. If we then say, how does that apply here in Australia? There hasn't been anything which is definitive, which is, the firms will have to split up here. That might be a moving feast over time, but the most recent information that I've seen is there isn't the same level of drive here to say there must be a split between audit and advisory firms here in Australia, but that may well change over time. But as those on this webinar may be aware, say for listed entities, for example, the audit partner at a minimum must rotate every 5 years from an independence perspective. That's similarly for APRA sort of regulated entities as well. And so there is an increasing view of, well, is there a level of mandatory, if not rotation, at least audit tendering of firms to avoid that long-standing relationship? And so I think those parallels will be drawn and are relevant at least into the self-managed super fund world. So I'd be saying, should there be perhaps a consideration if you're a large administrator, should you look to have a panel of auditors rather than just be solely dependent on one? I think that seems sensible and something which we've seen sort of commonly in the market already. I think then it would be considerations around, if you're a large administrator or accounting firm, how reliant is your individual auditor on you as an administrator in terms of business which is given to them in terms of the size of their book. So there's there's different guidance around that in terms of independence. But if you use some of the guides which are there typically is a 20% rule. So that if you're as an auditor, you're getting more than 20% of your individual revenue, or as a firm, more than 20% of your revenue from an individual client, there should at least be consideration around what safeguards should you put in place because of that element before us, sort of the litmus test around potential conflict of, well, because that revenue stream is so significant to me as an auditor, could I be impacted in terms of not wanting to rock the boat because I don't want to jeopardize that revenue stream and considering safeguards. So hopefully it provides some context without saying, I don't think it's going to be hard and fast in terms of the rules and things we're seeing in the UK, but it will, things will move over time. And I think we would be crazy as a group here locally and on this webinar to be putting our head in the sand and hoping that it goes away, because the case study is typically that things will filter down. They might filter down slowly, but they'll be filtering down eventually. And for me, it goes back to the substance over form. As the more it can be, well, here is the perception and the view to the reasonable person test on the street of, well, we can be doing things which mean it feels very much more independent rather than being technically correct or trying to avail ourselves of sub clause 25 of standard 32. I think that sort of is that it's more of a rather than being rules-based, more of a principles-based view to independence, which I think we in the industry in the SMSF should be moving to. Because I love talking about it so much. It was a great question. It's as if someone read my mind.
And you actually answered quite a few questions at once there. So we had a few questions around the general practice independence and percentages of how much revenue can come from one single source. So that's really good. I've gone through a few there. So I'll just have a look what else we've got coming through.
Micah, there's actually a question here that I might take. So questions from Wally. So you can't do audits within the firm, you can't do reciprocal audits, you can't do audits within your network. What about forming a group of 4 unrelated SMSF audit firms? Is that permissible under the APES 110? Now, I'll probably let Jeff answer some of that, but I'll just start by, no. I'll start by explaining what we're doing at Cloudoffis. So we've got a whole bunch of clients on the compliance side with our product SMSF sorted, and then a whole bunch on the audit side as well. So the way that we've approached it based on customer feedback is we're likely going to create a bit of a panel between 3 or 4 parties, as you mentioned, to be able to then, we'll make the introductions. It's obviously up to the firms to sort out, potential commercials and all that sort of thing. But at least to sort of find the sources of similar firms where you can have a source of replacement funds for funds that you do have to push out externally. And when it is 3 or 4 different firms, as you mentioned, Wally, our understanding is that is okay. Obviously, don't take my word for it and check with the ATO, but our understanding is that does get past the reciprocal component of the guidance. There is obviously, as Jeff just mentioned, the percentage type safeguards as well of how many you're getting. So there might be a few more funds or firms in there to sort of mix around. But yeah, I guess from a technology standpoint, from where we sit, that's how we're going to enable a potential solution in the market. So something to consider.
I won't fully dodge the question. I think it's a relevant question, and I think that there will be, given the nature of the structural change which will be required, I think there will be some need for there to be some structural change of different entities that are formed, etc. And so where's the right place for the self-managed super fund audits to be done, and it won't necessarily be with the current incumbent players in the brands which they sit in. But I would be saying that again, it'll be the substance over form, and so I'd say not trying to be too cute or creating structures which the ATO would say, well, look, that really is just a structure which is designed to contravene the intention of the Act and the independence rules, because we're the American style of accounting and auditing profession is very much more rules based, whereas we've always been here much more principles based. And so I think it would be, again, if you're doing anything which is really flying a bit too close to the wind and going against the principles, it might work for a period of time, but then if it's something which doesn't feel right, it may well be a matter of time before then the ATO says, well, look, let's look to tweak the rules or tweak the areas of focus so that's no longer compliant. And so I think that there would be that longer term thought process is important. But the only way you could really facilitate that is through, I think, something which Clint has mentioned as well, to effectively manage a panel and to manage the swapping different audits around between different parties, etc. The only way that you'd be able to do that sensibly and efficiently is through the use of a suitable technology to be able to triage and manage that style of workflow with multiple administrators and multiple auditors. And so technology to make all of that work and have a suitable audit evidence trail to support your commentary to the ATO, I think would be quite important.
Thank you, Jeff. One question for Monet we've got here is why could Class provide an audit service within the platform? And because there would be huge economies of scale for the bulk of funds with share portfolios, term deposits. So I guess that's a question for Monet and Clint, given it's got Cloudoffis versus Class here. What are your thoughts on that?
It's an interesting question. Class is a technology company, so it's not really our principles to do administration service or audit services. To create technology to facilitate that is what we do, and that's why we've got APIs, and that's why we would like companies like Cloudoffis to leverage of that. So I don't think that's really on our cards. It's not on our roadmap. It's not part of our business. So I can probably talk for a couple of seconds just on where we're going with our roadmap and where we're seeing Class is moving to. We're heavily investing in our technology. We want to make our platform world-class, meaning that in the near future, we're moving to a near real-time processing capability on our software, or event-based processing. And what that would mean is that we would slowly try and move away from overnight updates and more real time. So at the moment, our APIs, you can call them pretty much at any time, but in the future, you would be able to subscribe to some of the information. And when that becomes available, it will push that to external parties. So again, I think Class is not planning to become that. We're definitely planning to service the audit and audit software market better and providing the data that they need to rely on timelessly and accurately.
Right. And Clint, there's actually just a question that's been there. Does Cloudoffis have an SMSF audit package? So it might lead nicely over to you. Comment on that.
Yeah, so Cloudoffis has been around for about 4 years, and the audit package has been around for about that long. Last year, we launched our compliance site product as well. They both, to Monet's point, integrate fantastically into the Class APIs. But in this example, more importantly, each other. So it sort of, I guess, standardizes the compliance work and then audit work. So then if you are looking for various for new auditors or new relationships, if they are within the platform, it can potentially de-risk some of that stuff in standardizing your processes a little bit more, managing your queries, all that sort of stuff is all part of the platform. So yeah, some of the things, as I said, that we covered earlier in having to change a lot of internal and external processes can hopefully be made a little bit easier.
Thank you,
I think it's an interesting point, and so I can I'll caveat in that as a firm where we are technology and platform and vendor agnostic, so we see a lot of different options in the market. And I can also clarify that Monet has not offered me a job to go across and be an auditor, under the class banner. And so I think it's interesting in terms of a paradigm of the thoughts around efficiency, because I think that the thought process around efficiency and that was, I think, the premise really of the question, I think does make a lot of sense, in that it is the use of technology and the use of the straight through from feeds, through to a software like us, through to then sort of a Cloudoffis and a sort of solution through to an auditor. That sort of straight through style of process and less handoff points and manual movement, that's key, and that ends up really being the future of audit. And I think this independence conversation helps move people down the path of that technology focus. When you're doing a small number of funds, it is probably easier sometimes to go, look, I won't worry about relying on the data feeds. I won't worry about doing controls testing and reliance, because it's just as quick to do a substantive style audit, the tick and flick, and then you're finished. But as you look to scale, and as you look to move to inevitably some more centralisation for the audits, there is real efficiency for the auditor. There's real efficiency for the people doing the administration, and it ends up being perhaps efficiency and/or cost saving for the end trustee, because there's just less double handling and manual process. So I think this at this juncture really does allow us all to think, how do we do things better, faster, and cheaper from a broader end-to-end piece, enabled by technology. So I think it's quite an exciting time. And I'd say that if I'm trying to draw parallels again with other industries, SMSF audit, sometimes it has been that more substantive focus and approach, but because I do sort of audits more broadly and have audited large retail and industry super funds, and some of those have sort of billions of dollars in terms of assets, and then tens of thousands or hundred thousands of members. We would never look to do the audit of a large retail or a large industry super fund. You wouldn't look to do that substantively of manually ticking off investments in hard copy paper and sort of substantively. There is a reference to data feeds, there's a reference to technology, there's a reference to testing of key controls to then be comfortable with the balances and the items. And so really, this is a movement of self-managed super fund moving more aligned to that wider super system in terms of audit approach, is what I would see as where the next few years is going for us.
Thank you, Jeff. And I guess one final question to sort of throw out there and to close it all off is a more pressing one. It's around, if a firm using a Chinese wall approach, will they still be okay for the 2020 audit? But maybe broaden that a little bit. What do you think will be a scenario that will be okay for this year's audit?
So I would say, without providing advice or a get out of jail free card, I would just be saying that if people on the call were concerned or looking to go through a process, I'd reference back to APES 110, and then particularly the Independence Guide, most recently released, referred to the elements of the self-managed super fund section, which is there, because it does provide some guidance around what some relevant safeguards would be in circumstances such as that. So I'd be saying that organisations should be saying, look, with reference to those guides, what are some of the processes they can put in place to help point to, they consider the independence potential challenges and put up the right checks and balances to have a defensible position for this year. That'd be my suggestion.
Thank you, Jeff. Monet, Clint, anything else you would like to have as a closing sort of statement? Otherwise,
I think just on the back of, I guess, that question and Jeff's answer, I think, yeah, just to plan early. Obviously, it's obviously going to be very difficult to determine a moment in time where one thing's okay and one thing's not. I think, as we've mentioned, it's pretty much in play now. It's just a matter of when the ATO is going to sort of act and things like that. So I think the big thing is to plan early and just understand exactly where you think your firm will land, and then what that means as far as change, what the potential business risks are, what things out there can help with that, whether it's technology or externally based partnerships. Who are the best types of partnerships to create or have? So yeah, I think that's really the thing here, is just planning early.
Yeah, I would also say, have a look at take stock where you are at the moment and what's around and what you can change. If you're still manually preparing your audit file on a PDF and you're referencing all over the place, is that the best use of your time at the moment? Is there better ways and better systems to do it? And get yourself aware of that, because that will be the first step in the process to de-risking you from this. And then once you kind of decided on what technology will work best for you, then the question on what partners are available to help you, and if you want to externally outsource your audits, who plays nice with those technologies that you've selected, and then build your plan from there. So definitely my advice is, follow what Jeff said for this year, but plan to be ready for the changes, because they might only be a few years away. They might be longer, but the sooner you get ready, the better for your business.
Thank you, Monet. So to close everything off, we're mindful that we haven't actually gotten through all the questions, and I know there's a lot of different discussions going on. I'll just fire off one last poll that will allow you to let us know if you want to get in touch with any of the panel members in particular, and then we can follow up with that and kind of continue the discussion with you personally. So I'll share that now. Great. So while you're voting there, I just wanted to thank everyone on the panel today, and thought it was a really interesting discussion. Hopefully, all of you attendees found it interesting, and you got some new thoughts out of this and new ideas. So yeah.
Excellent, thanks guys. I might just add, we'll try to come together and answer the questions that you guys have sent through, and yeah, and come back to you all.
Thanks, guys.
Thank you, guys. Have a lovely day.
Bye.